The channel members voted and they want to know how investing can be a career. Fasten your seatbelts, folks. This is going to be a good one. Investing can be a viable career for anyone with the skill and dedication. With the right approach, an investor can turn their trading screens into a source of full-time income by becoming, well, a trader. We will mainly be focusing on the do-it-yourself approach, but in addition to that, there are multiple professional certification or degree paths. For those looking to dive deep into the world of finance, professional certifications are a gateway to expertise and credibility. The Chartered Financial Analyst, or CFA, will cost you about 900 hours of study, but it is a huge certification recognized in over 165 countries. There is also a Chartered Investment Manager, or CIM, which also comes with a good amount of study in addition to required work experience. For those preferring to get a degree, you could always get a bachelor in finance, or you could go after that coveted Master's in Business Administration, or MBA. Keep in mind, to become an MBA, you are definitely looking at a very, very big time commitment. If becoming a financial advisor is your path, you will require specific licenses to practice, and the qualifications, they can vary a wee bit by province. We are not really going to talk anymore about the professional path, as the focus of this video is on the do-it-yourself trader career path. Join the conversation. Let me know in the comments if you are a career investor or trader. Your participation is, of course, well appreciated. Don't forget to like and subscribe to stay up to date on future content, and a huge thank you for that click. When it comes to a do-it-yourself career path, we are almost always talking about either day trading, swing trading, or options trading. Let's begin with day trading. Day trading isn't just a job. It's more of a lifestyle, actually. It's about making quick decisions, staying informed, and being able to adapt to rapid market changes. Day traders buy and sell stocks within the same trading day, hence the name. This allows them to capitalize on small price movements. It's fast, it's intense, and it requires a solid grasp of market mechanics. A lot of day traders will use margin, which is basically the ability to borrow more money for their trade. Thus, they magnify their gains or their losses. Margin is not for the new trader. You want to have a good grasp and track record before you add that extra layer of risk. To be successful, you'll need a robust trading platform. Think real-time data, advanced charting capabilities, and lightning-fast execution. It's not just about following technical analysis. Day traders must have a psychological edge. Emotional discipline, stress management, and decisiveness are key to navigating the volatility of the markets. Day trading also requires a significant time commitment. It's not a set it and forget it kind of deal. You need to be glued to your screens, constantly monitoring the market for opportunities. And when we talk about capital, to day trade effectively, you need enough money to withstand losses and make your gains more significant. Okay, let's switch gears a little bit here and move over to swing trading. Swing traders operate on a slightly longer time frame than, of course, day traders. They hold their positions for usually multiple days and sometimes even weeks. This style of trading tries to capture swings in stock prices, typically focusing on stocks with short-term momentum. It's less about high-frequency trading and more about finding significant moves within a broader trend. Swing trading requires a keen eye for technical analysis. Chart patterns, moving averages, and volume are part of the trader's toolkit, but it's not all charts and numbers. Fundamental analysis also plays a role. Understanding a company's financial health and the broader market context can absolutely give you an edge. The key advantage of swing trading, it's less time intensive than day trading. You don't need to monitor the market every minute of the trading day, which makes it more accessible if you can't commit to full-time trading. Risk management is crucial here. Knowing when to cut losses and when to take profits can make or break a swing trader. Finally, options trading offers another dynamic career path. It blends analytical skills with strategic risk management. As an options trader, you specialize in securities that you can charge a premium to other traders for to provide the right, but not the obligation, to buy or sell a stock at a specific strike price on or before a certain date. Options requires a deep understanding of market trends, volatility, and complex financial instruments. Successful options traders are known for their ability to forecast market movements, employ diverse strategies like hedging, and manage the inherent risks of leveraging. This career path can be lucrative, but demands continuous learning and adaptability to changing market conditions. Making money in the market is one thing, but proving that income for a mortgage, a car loan, or even just renting an apartment, that's another. As a trader, especially if you're self-employed, you need to be meticulous with your records. Regular profit and loss statements, trading account summaries, and annual tax returns are essential. Of course, in Canada, all income must be declared to the Canada Revenue Agency, or CRA, and that includes income from trading. This is where good accounting comes into play. If you are afraid of the math, of course, you can consider hiring an accountant who specializes in trading or self-employment income. They can help ensure you're reporting correctly and taking advantage of any relevant tax strategies. For potential creditors or landlords, consistent and official documentation of your trading income can build your credibility. It shows that your trading is not just a hobby, but a legitimate source of income. Keep in mind, some may still be skeptical about the stability of trading as an income source, so having a backup plan or additional proof of financial stability can be beneficial. In some cases, you may be able to create a personal business and then funnel your trading proceeds into that business and then pay yourself a salary through an employment company such as, ADP. That is one way to get around the proofs, and there can be some tax benefits to that approach as well. Before you jump into that lucrative career of do-it-yourself trading, it needs to be said that there are a lot of risks involved. Income will, without any doubt, not be steady, and building up a financial buffer for the bad months is essential. This is not something you can just jump into and start pumping out the cash immediately. There is a learning curve involved, and for some, you could be looking at months, if not years, of losses before you start turning a profit. In fact, anyone who wants to give it a whirl, I highly recommend beginning with paper trading. This means that you are not trading with real money. That means that some of those learning losses are not going to be actual real dollars and cents coming out of your pocket, so that's not too shabby. Keep the learning going. Watch my video on Whitecap Resources linked on the left, or test YouTube's recommendation skills by checking out the videos on the right. Your choice will decide the winner, and I will see you in the next video.